Hello, everyone. KT here with another episode of the Loan Officer Experience Podcast. And today we have a special guest joins us. His name is Chris Mozilo. And man, Chris, I'm so glad you're here. He's the Senior Vice President of TPO Production with Kind Lending. If you don't know Kind Lending, you should know Kind Lending. They're certainly a great organization to plug into for your business and your production. Chris has been in the mortgage industry for a very long time. Has experienced the highs, the lows, and everything in between. And at Kind, he's helping reshape culture, and it has a completely different look and feel, and just a lot of things to empower loan officers and originators to build their broker business and to build trust and to help you take your business to the next level. And we're going to dive into a little bit of that stuff: culture, what differentiates you guys, leadership, brokers should be paying attention to. So without further ado, Chris, welcome to the show.
KT, thank you very much. Very excited to be here and have the opportunity to hang out with you for a little bit.
Yeah, man. Well, it's always good to meet new people, and you and I haven't, we've been getting to know each other last, say 10 or, 14 days. And, I know that Kind Mortgage and the culture you guys have started over there, I've started a lot of relationships with some executives and leadership there. And I've always been impressed. And y'all recently recruited my account executive, who I've known for 23 years. She's a freaking rock star, right? And
She's
so
an animal.
yeah, so she's guilt to me, and hey, and I've always just kind of followed her wherever she's gone, which has not been very many places in 23 years. But I think it's important for the broker community and loan officers, originators, regardless of kind of where you sit in the industry, to know a little bit about the people that they're working with. I think it's important. So just share a little bit about your experience in this industry, and what your new role is with Kind Lending.
Yeah, you mentioned I've been in the business a long time, and we won't say the number of years, but it's been a few decades.
Sure.
I'll admit, I did start very young in this business, but I've only been at Kind for 5 months, a short period of time, and I don't move companies very often. I like to stay at one place for a long time. And this was just an interesting opportunity. I've always admired this company from the outside. I've known Delfino Aguilar for many, many years, going back to when he was an account executive, and really had a strong relationship with him. He's a great human being, individual, hard worker. And then, of course, the ownership of the company, Glenn and Mindy Stearns, have really paved the way for what the culture is, right? They put it in the name, Kind. And so, it's the foundation of what we are. We try to do the right thing. And it even opens us up to criticism too, right? If, nobody is perfect, and maybe we make a mistake here or there, but it's how you own up to those mistakes and what you do from that point. And it also opens up to criticism, right? If an underwriter, doesn't approve a loan, or, they could say, hey, you're not being very kind, are you? If they don't like a condition or whatever it is. But, it does make us, I think it really forces us to be what our name is, and do everything we can to always do the right thing. So that's really what the culture is about. And listen, I've worked, I think any company I've worked for at least the past 20 years has talked about culture. And I think it's a buzzword in a lot of ways.
Yeah.
But I think very few, really take ownership of it and make it the focal point of who they are.
Yeah. I couldn't agree more. And like I said, I've gotten to know you guys. You've been gracious enough. We had some technical difficulties as we were getting on here. And it is a little frustrating for me, but you were so just, very appreciative of the way you responded to it and whatnot. But, really, culture, it is a buzzword, and it does matter.
Mm-hmm.
And, it makes me think of even like retail loan officers. I was in the broker community for 10 years. Then went to retail. I felt like, after the debacle in 2008, retail
Yeah.
somewhat scared loan officers into retail. And thought I was one of
Sure.
the last of the Mohicans in the broker community. And I finally jumped ship. Right. And And I was in that role for 9 years before coming back to the broker community a few years ago at mid 2022. What would you tell loan officers that maybe they're on retail around a culture? Because I think a lot of times I used to have a retail lender tell me, well, we have a lot of culture. I'm like, well, yeah, but culture don't close loans. So how would you do
Right.
loan officers who are considering becoming brokers that there's still this culture in the broker community? Would you agree with that? And what would you have to say about it?
100%. It's interesting. I do honestly believe, and I've gone in my career, right, 30 plus years. I've been in wholesale. My very first job when I was 18 years old was in a countrywide wholesale office in Pasadena, California, and just learning the business. And I got to understand brokers, and that was really my first introduction to the business. And then over time, I did. I originated, I processed, I did a little bit of everything in this business on the origination side, and so I've kind of weaved a few times out between wholesale and retail. And the thing I found, and I really see it today, is you have this migration of loan originators from the retail channel over to wholesale for the last several years. Is it's not for everybody. Not every originator should be a broker,
Yep.
right? And I do think, and I don't mean this as a slight to anyone that's in retail, because I think there's outstanding loan officers
I
on
agree.
the retail channel as well. But I think you have to be a certain level of sophistication to be a broker originator, right? You have to be able to say, okay, I'm gonna learn to master maybe 3 or 4 or 6 different wholesale lenders, platforms, understand how to work with them, make sure I have all these tools in front of me so I can be able to find the best solution for my client. And the advantage of that is obvious. You know it. I think most originators know it, but often you can get better pricing for your clients. You can get better service because those wholesale lenders are treating you like a client. They know they have to earn your business, that they have to earn that next loan. So they're doing everything they can to try to make that experience great for you. Um, and so, if you can learn those different systems, it's great. I do know some retail LOs that have come to wholesale and said, man, this just maybe isn't for me. I just like one path. I like to keep it simple
Yeah.
and do it one way. And that's fine too. But I think there's some great advantages if they can make that adjustment to be a broker. And I just think there's so many opportunities that they can serve their clients better.
Chris, I appreciate that answer, man, because it's one of the most honest answers I've ever heard. And I mean that, like
Mhm.
I really mean that. But it's a great answer. I do believe that retail was good. I was there for 9 years. And so it's a different model. It's not a worse model. It's not a better model. It's just a model. Right.
Right.
And everyone has to kind of try it on and see if it fits them. But to your point, you are accurate. I think that the landscape of the broker community is changing. I do think there are more options, better pricing, and better experience, like you mentioned. The technology is really leveling the playing field in that regard. And I think that, you know, if you're in retail, I do. I just think retail loan officers, hey, you got to start thinking about the future and how are things going to change.
Hmm.
And you've got to put yourself in a better pricing position. And really, I think loan officers, especially with the early adopters of AI, if you're a good influencer, you're going to be a successful loan officer. That's what I believe. And so I love your answer in that regard. As far as being a sales leader, because that's what you do. Um, how do you inspire teams through tougher markets, right? Or what's your best
We've definitely had to
story?
do that over the years. Yeah.
Yeah, yeah. So, what's your, what's your best story of turning discouragement, and maybe something you could speak, use an example that you have had in your career with, maybe whether it's account executives or you're speaking to a group of loan officers out there that are maybe lost a little bit on, what's their next move.
Yeah. It's this market can change quickly, right? For the better or the worse. And we've seen that many times over the years. I think the first thing that comes to mind, I think of around COVID when we weren't sure, March and April of 2020, we kind of weren't sure what was happening. You'd see these massive fluctuations in the market. You're seeing companies not sure if they were going to survive margin calls and things like, because the market was swinging back and forth so dramatically. And so I remember having just daily, and nobody's in an office, right? So everybody's on Zoom or Teams, and I just remember um, every day having meetings with my team and get everybody on camera so we see everybody's faces and talk to them and let them know, be honest with them. Obviously they want to be reassured that everything's going to be okay, but you also have to be, honest with them, because I think they can smell, smell the BS if that's what you're giving them. And so just communication and being in front of them. And I think being sincere with people, I think really matters. Um, but also giving them hope and show them what the opportunities are out there. And we went through that. And obviously COVID ended up turning into being like two of the best years ever in our industry because of the low interest rates.
Yeah.
But then we had that cycle afterwards, right? And a lot of people didn't, and a lot of companies and a lot of people didn't make it through that period of time, right? They decided to, maybe they've been doing it a long time. They decided to retire, or they decided to hang it up. And so the ones that are doing it today are the ones that found a way to get through it all. And, if you could show people that, there's opportunities out there, and as rates rose, what is it that we do? We made a shift to non-QM. We started doing more non-QM products or second mortgages.
Yeah. Those have been great, by the way.
Yeah. So, or even, cash out opportunities, because there's so much equity built up. So there's a lot out there that if you are willing to shift with the market, that you could still find success. And that's really how mortgage companies succeed. There's the most successful companies that I've seen over the years are the ones that can, no matter what interest rates are doing, you can scale up quickly when the opportunities are there, and then you can scale back when you have to, as the market changes. And the ones that can do that as quickly and seamlessly as possible. And in some of those, especially the scale backs, right? That's going to be painful because there's reductions in force and things like that. But the companies that can do that effectively are the ones that survive over time.
Yeah. I do think that the winning position or winning positioning is very important. And you've got to really think about what that looks like for you as an originator, regardless of where you're at, in the
Mm-hmm.
business, whether you're on retail or the broker community. And, just to be clear for those that are listening, that I enjoy retail. I like retail. I think that retail has its place in the market. But at the same time, Chris, I came from retail after coming from the broker world, and I'm looking at it. I just feel like, at least what I experience, and I'm curious how you feel about it. Do you have you communicated, or have you heard or talked, or maybe felt like some of the retail LOs or feel a little stuck right now with having to sell maybe a little bit higher pricing, and it's in an already tough market? And if you think that that's a reality, um, you know, what's a way forward for those individuals, those loan officers? I mean, obviously, we never bash retail, but at the same time, we want to promote the broker model, right? So what
Mm-hmm.
advice would you give someone who's sitting on, because I've got a lot of friends that are sitting on the fence that are like really thinking, hey, KT, should I do it or not? I'm like, hey man, it's your choice. Here's the pros and cons to it. What do you say?
Yeah, I mean, I would say give it a try. It's
Yeah.
I just came from flew back to I live in Phoenix. Flew back home to Phoenix last night. I was at um an event for one of the larger mortgage brokers in the country the last couple of days, spending time with them, and I had a dinner on Wednesday night with a handful of those loan originators there, and some have been brokers for a long time. Some had just made that switch from being a retail loan officer to a broker. And most of them, the reason for doing it was the pricing, right? They'd look and they're like, man, I just have a hard time competing. And I see these other brokers that can just, get 50, 100 basis points, better than what they can offer on the retail channel. And that's not every retail company. And even Kind has a small retail
Yeah.
origination channel, and they do a great job. And so I'm not going to bash retail. It's a channel that I think should exist. But for the brokers for the loan officers that are able to want to have different options for their clients, being a broker um, is a great way to do it. You can have, of course, we want a loan officer to send all their business to Kind, of course, but you have the ability from just looking at guidelines and products that, hey, I've got Kind has some great non-QM products, and let me look at them. Or hey, there's somebody else that does something different that we do, and so you can pivot and send a file over there. Maybe lender A, their underwriting gets backed up, and then so you can switch gears and, hey, I've got a quick close, I need to send it over here because they got faster turn times, and you have that ability as a broker. Whereas if you're retail, you've got one place to go, and you just don't have those options to pivot.
Yeah. That's such a great answer too, because it's like a lot of my lender partners are retail and wholesale. They have a wholesale division, right? And then
Mm-hmm.
I've seen some that are closing their wholesale division and or their retail division, and that kind of fluctuate. But when you look at the overall picture, you do both. So that's a
Right.
model, right? So there
Yep.
are lender partners out there. There are organizations that do both because they understand the market. They understand, that they're the same, but they're also different. And they also, it's a great business model for some organizations because they get a little bit of both worlds. And we know that a market will sometimes drive favorability to one versus the other. And so I think that's where we're at in a lot of what you're saying. But this is really good education for those that are just thinking about it. There's not a right or wrong answer. It's what's best for you. I'm a firm believer that, that's exactly why I came over to the broker world, was because of the pricing mainly, but I also wanted more control. And I like to feel like a customer, man. Like when you guys at Kind or, any of the other lenders that I talk to, I just feel like I have so many flavors to choose from, and the non-QM has grown substantially.
Mm-hmm.
And I just feel like I have more options. I feel like a customer again. I'm having fun again. It's, yeah, there's some strains to it, but there's also a lot of benefits too. And you just have
Yeah.
adapt and kind of overcome and sharpen your
And
act.
excuse me, you brought up the non-QM, and that's those products, right? I think make it fun too to also be an account executive.
Yeah.
With our folks, they're able to get a little bit more creative, come up with solutions, right? That I think that's what our best account executives, and we have, I think, some of the best account executives in the country that are here at Kind. And the loan officer is able to just call them up, talk through their scenario. Hey, this is what I see. This is the problem. Because listen, our business, doing a loan isn't complicated. What's complicated usually are the human beings we're doing the loans for.
Yeah.
And so having the ability to do bank statement loans or asset utilization loans or written VOE loans,
Yeah.
having a lot of different options helps you come up with a solution for just about anybody, anybody with good credit anyway, and a down payment.
Yeah.
And so, um, so having that suite of products, I think is key, and actually makes it kind of fun to problem solve for our broker partners.
Yeah. Man, I could not agree more. I feel like I'm cheating sometimes. I do. I feel like I'm cheating. I'm like, man, I was able to get this loan done. I feel like I'm breaking the law sometimes. I'm like, man, I can't believe we were able to get that transaction done. And a lot of it's with these outside the box. Now we're not talking 2008 outside the box, or if
No,
you have a
this is
Wall
not
Street
this is
Movie.
not old school
Very,
subprime, and I
yeah,
always make sure that people understand that. Like, these are, listen,
it's
you talk about a
responsible
bank
lending.
statement loan.
Yeah.
This is not stated income or ninja
Right.
loans from back in the day, right?
Yeah.
And I can, if I'm looking at a borrower at 12 months of a borrower's bank statements, I can tell a lot more about that borrower from those bank statements than I really could from last year's 1040s, right?
Yeah, exactly.
Bank statements tell a much more detailed story.
Yeah. And I've been able to, I remember I closed one not long ago. The guy didn't have any tax returns and he was a YouTube sensation. Like he's got 3
Okay.
million followers. He happens to live in my town and I've gotten to know him and he does cosplay and stuff like that. He was making almost 7 figures a year. He is now,
Yeah.
but he was almost there. And so he just hadn't filed his taxes. And so we had to go through some hoops to get it done, but we were able to get it done. He had 5 lenders tell him no. Reason I share that is because these non-QM products are so substantial because it's a realtor relationship builder, right? Because a
Hmm.
lot of my local banks, they won't do these things or they will do them and the rate's substantially higher. And man, these non-QM products are almost like a paper loans. We try to go Fannie or Freddie. If we can't go that route, we go Alt-A, AKA, non-QM,
Right.
and we get so many of them done. It's been such a great piece of my business, and so I love it. I absolutely love the non-QM. I know you guys are highly involved with those as well.
It's a lot of what we
But
do for sure.
yeah, and so I want to talk about Con for a minute,
Hmm.
and you know, how does Con empower originators to market themselves instead of just pushing volume? And I really want to know, like, I know the non-QM thing is a big deal for you guys as well, but what are some other things that you think that kind of offers that's really empowering? Because there's one thing that I have loved most about, I mean, from day one when we first started working with you guys was the tech was good. It was easy. I remember everyone
Yeah.
saying, "Man, your tech is pretty impressive."
Yeah, I mean, other than, talking with people, whether, the originator's talking with their account executive or the underwriter or the account manager, right? The real interface, other than talking to the people, is the portal, is the technology, right? And
Yeah.
we've got our quickie portal, and that is, you know, other than, again, like I said, talking with the people, that's what our loan originators are working through. And I have heard, it's not just me saying it, but originators from all over the country telling me that we have the easiest to use portal, period, in wholesale lending, and that actually makes me really excited and really proud because it's a great, first impression. If the best technology shouldn't require very much training, and we do have a great training department. We can walk people through how to use it, but I can tell you, there's so many originators that can just pop on it, and it's just easy. It's intuitive. Everything is just listed right there for kind of next steps, what to do,
Mhm.
and whether it's pricing a loan, uploading the loan, registering it, getting their LE out, um, uploading conditions, looking at their approval, locking, ordering docs. It's just really simple, intuitive, and I think that empowers a broker because they can just do things on their own time. Right? It could be midnight if you want to, and maybe you can't call somebody to get some help. But hey, if the technology is there and it's easy to use, yeah, you can do it on your own time.
Yeah. And that rings true for the broker community as a whole. I've seen so many of these lender partners, just their technology, but man, and I'm not just saying this, I hear that Con's got the best technology. I keep hearing that. And then I talk to the other lender partners. They're just like, yeah, we're making ours better too. And I'm like, great, we all win, man. This is great.
Yeah,
But there's something else you guys that are this really, I think that Con is leading on, and that's a lot of the non-Dell opportunities that you guys, offer. And I'm a non-Dell lender, which is also known as mini correspondent. People have different language around it. And we're going to be doing some training around that moving forward. And not just with the AIME community and the broker community, but we're really going to be pushing that with you guys. And I think that y'all are probably going to be leading the charge in a lot of ways when it comes to correspondent lending. So definitely looking forward to that.
yeah,
Um,
we're definitely doing more of the non-delegated correspondent. It's grown. It's a
yeah.
good chunk of our business now for sure. I think we've got a great process for it. We
Yep.
offer kind of a full service, which is very similar to being a broker, where you can do the disclosures
Yep.
within our portal, but in your name because you're the correspondent,
Right.
and then use us as the doc vendor, where we can draw
Yep.
the closing documents in your name.
Yeah. Love
We've
it.
have that path. And then for others that prefer to do their own disclosures and their own LOS and draw their own docs with their own doc vendor, we have that path as well. And so
Yeah.
we try to fit everybody's needs there.
Yeah. Yeah. Everyone
And
does like, it's just preference, how you like to
yeah,
do it.
and the biggest hot button is the speed of purchasing those loans once they are
Yep.
funded, so that you can keep turning your warehouse line, and we are very, very fast with how quickly we're purchasing those loans within just a day or two.
Yeah. Well, I'm looking forward to going over the pros and cons with Kind and in that whole mini correspondent world and how it benefits originators and how to use it for your benefit. And it's very helpful for your clients on VA loans and streamlines. It's just so many benefits to it. And I'm looking forward to going over that and certainly hope you guys will lead the charge with us. But I'm going to ask you another question. What do you think loan officers today are underestimating about the current market? Um, so if you're talking to a loan officer, what do you think that,
Mhm.
that they could look at differently today?
Yeah, we've had, the market's got rates have gotten a little bit better. I know they've kind of popped up a little bit, but it's certainly better than it had been over the past year.
Yep.
And I think maybe one of the biggest missed opportunities was with cash out refinance. There's so much equity out there, and I think people are afraid. Oh, I can't ask this borrower to refinance because they've got a 3% interest rate on their first mortgage, but shoot, maybe in the last year they also got a second mortgage that's at like 9%, or and now you can, with rates where they are, and maybe they want to even take out a little bit more equity or just combine the first and the second. I think there's some opportunities out there still for refinances, and I know a lot of brokers that are out there that are taking advantage of it, and they're very measured, and have a system with their approach, and how they get leads and how they get their borrowers. And so, don't fall asleep on refinances right now, even for those borrowers that have lower rates on their first mortgage.
Yeah. I couldn't agree with you more. My good friend, Barry Habib, he
Hmm.
would, he still always says it. He's like, man, KT, there's literally money in the streets. He's got a book called Money in the
Yeah, he wrote a
Streets.
book about it.
Yeah.
Yeah.
And I talked to him often about it. I was talking to another um, good lender partner of ours, and he's telling me the same thing. He says, loan officers have a really difficult time sometimes just sitting down and going through their existing database and thinking that these low rate mortgages don't have debt. And of course, we all have a story, right? I
Hmm.
can tell you how many clients I was able to help last year that went from that 3 to 3.5% rate to mid sixes, you know, and I was cash flowing them anywhere from $700 to $1,500 more a month, you know,
Yeah.
and matching the same term. Actually, a lot of them are paying off the mortgage sooner than what they were with the lower rate because they had so much cash flow now that was eliminated. And of course, a lot of originators say, well, what if they go back out and get in debt? Well, that don't have anything to do with me, man. I tell them, hey, don't
Yeah,
do
you can't you can't predict what they're going to do, but if you can get them out of that high rate consumer debt,
yeah,
for sure, yeah, you
yeah,
can still help their cash flow.
yeah, definitely a no brainer. Okay. So what predictions do you have when it comes to 2026 and, something that, none of us have a crystal ball unless you're Barry. I feel like
Very,
sometimes he has a
very. I've
crystal
seen
ball.
him. He gets these awards that are
Yeah.
crystal balls, but I
Um,
don't have one. And even you get we get projections from the NBA and Fannie Mae and Freddie Mac, and they do these projections every year. I, and I'm not even sure exactly how they come up with what those are going to be. I don't think anyone truly knows what 2026 will bring. We'll make a decent guess at Kind. We'll make a guess as to what we think it might be, and we'll make some projections and goals for 2026 as to what we want to do. Ultimately, the market's going to do what the market does, right? We can't control that. We can only control how we react to what the market does. And if the market is in our favor and rates go down, man, we're going to scale up, and we're going to do as much business as we can and provide the best service and empower our brokers and be the best partner that we can to our broker partners through that environment. If the market goes the other way, we're still going to try to grow for sure, but it's going to be a different sort of growth and how we try to get that business. So I don't know what the market's going to bring in 2026. I just know that whatever it does bring, we're going to respond, adjust the sales, and still be as great a partner as we can for our brokers.
That's such a great answer as well. I keep telling you, your answers are so great. They're great because they're honest and they're truthful, and and the reality is we don't know what it's going to look like. And you know what, Chris, I'm tired of guessing. Like I'm so
Yeah.
tired of guessing. I feel like we've been guessing. I think the traditional tools that we've used to measure the market broke for a little while. Then they started kind of working again. I think a lot of originators have gone through the process of, oh, about to have a refinance boom. And then it like gets right there in the doorway and we start and then it goes away like in a week or two. And then it comes back slowly. And
Hmm.
it's been just a roller coaster. It really has when it comes to market conditions. But I love
Right.
how you speak about adapting, overcoming, and just adjusting to it. How do we adjust to it? Well, we adjust to it by working and focusing on helping more people, whether it's, with all the equity to your point, that's how we solve the problem.
Hmm.
What do we have? Well, we have a lot of equity in homes. Okay. So how do I solve that problem for a customer? And then having that communication to them on a consistent basis and staying in front of them, being that resource in your community, the boots on the ground to help those people. I think a lot of times, I don't know how you feel about this. I feel like loan officers, because it was so simple for so long. I mean, we had a good run there, and there was low hanging fruit. You didn't even have to pull it out of the tree. You just bend down and pick it up off the
Right.
ground. It's so simple. And now I feel like that as an originator, if you want that business, you got to climb up the tree and go get the fruit, which climbing the tree is doing the work.
Well, and that's
It's
why
just,
we have fewer originators, right,
yes.
than we did a couple of years ago, right? We've seen that where it just this market, when you have these markets, it kind of weeds, it does weed people out. Uh, I tell people that you got to have an iron stomach for this business. There are
Yeah.
ups and downs. You have to be able to adjust to, just do everything you can, work as hard as you can when rates are low and business is flush, and make sure you're saving that money. I see too many times
Yeah.
people adjust their lifestyle to the biggest paycheck they ever got, and that's a big mistake in this business,
Yeah.
right? And you know, put money away, and then, when things get tougher, right, adjust. Okay, all right, I got to do something different. I got to work a little bit harder. I got to dig a little deeper for every loan. I'm going to have to talk to a lot more people, right, for every loan. But you have to do that activity, and you have to make those phone calls, right? Whether you're a wholesale account executive and it's calling loan originators, or if you're a loan originator, calling realtors, or past clients or other referral sources. Um, yeah, it's just doing more of that activity that breeds that business.
Yeah. I love it. If you're listening to this, you're an originator, I would encourage you to partner with lenders who are going to empower you. They're going to help you grow your business. And let's say this, man, never underestimate the value of culture and trust. I've gotten to know you guys, Chris, at Kind. I love Delfino. I've enjoyed getting to know you as well. And I trust you guys. And you got the best AE in the planet over there. My friend, and I've known for 23 years, Tiffany Bradley. So I'll give her a little plug there. But
Yeah.
Chris, I just want to say thank you for joining us. To our listeners, stay tuned for more episodes where we bring you strategies and stories, just people like Chris to help you in your business and see things a little bit differently. Chris, any last minute words, my man?
You know what? I really enjoyed it. I love talking about this business, and really enjoyed getting to know you and chatting with you, and love to do it again sometime.
Awesome. Sounds good. Guys, we'll see you later. Until next time.
All right.